Welcome to the Legal Insight podcast by HHQ. I'm your host, Zach. I'm the Business Development Director at HHQ. This is episode 10, a milestone episode for us, where we are going to dive into the second part of our special two-part series on digital assets, real-world asset tokenization, DeFi, and the future of finance. Now, we're excited to welcome back our guest, Johnson, Head of Technology Practice Group, Khai Yi, our Co-Head of Technology Practice Group, and our special guest today, Derrick Leong, the Head of Legal and Compliance for IX Swap. Gentlemen, welcome back to the show.
Thanks,
Good to see you again.
Let's dive right in by breaking down some of the most pivotal concepts shaping the digital finance landscape today. Johnson, to kick things off, could you briefly explain what is DeFi or decentralized finance? And why is it generating the buzz in the financial world right now?
So DeFi is exactly what the name suggests. To put it simply, it basically means finance without a central authority. DeFi has been a very hot thing. The reason because it's decentralized. Let's say, in order for you to get a loan from a US bank, it's almost impossible. Because in order for you to get a loan from a US bank, the only way for you to achieve that is you need to open a bank account with that particular US bank. And in order for you to open a bank account with that particular US bank, you have to go through the procedures, you have to go through requirements, and then which will cost a lot of hassle just to get one simple loan. And then the concept of DeFi is to really overcome these kind of hurdles. So for DeFi, it's a decentralized finance. So if you want to do borrowing, do lending, do trading, or even just for like staking purposes, yield farming, you are able to overcome that without a middle person. So for example, right now, in order for me to get a loan to get from any bank, I need to go through the processes. But for concept of DeFi is I'm able to access to secure loan financing without going through a bank, just by having access to the protocol, to the platform, and then I will have that the loan financing that I required. And this is the exact reason why people are crazy about the concept of DeFi, and then they really want to explore and to understand more about DeFi.
The concept sounds good, but the implementation, how is DeFi being implemented? So you say lending and borrowing without a middle person. So where are the funds coming from? Who's managing those funds, and how do I get access to that?
So the concept of DeFi or the concept of blockchain, something is called a smart contract. Smart contract, I would say that will be at the core of DeFi. So it means that there's a smart contract. The moment certain conditions are met, then certain transactions will be executed without a middle person. So usually for DeFi, what happens is something they call a liquidity pool. So it means an LP. So there will be a bunch of people funding the LP, and then there will be a smart contract. So in order for me to actually get the certain particular loan, so I will just access to the protocol, I get a loan, and then with the required interest, they already be fixed early on when I enter into the contract. So everything is super clear, and the smart contract, in order to ensure that they will successfully execute the moment I meet that condition or the requirement.
So now, given the context, how do you see DeFi kind of evolving in the next few years? And we're talking about disrupting traditional banks. What areas of traditional banks do you see DeFi disrupting?
It's a love-hate relationship, you see, because right now, this DeFi model, they are set to disrupt bank. They are really set to disrupt the financial institutions, because one of the core business of different banks is actually providing loans. So imagine right now, instead of me going to banks to secure loans, I'm actually going to a random DeFi platform to secure loans. This is going to affect the business of banks. So banks wouldn't want that. So right now, from our understanding, different banks and financial institutions, they're actually exploring the technology of DeFi. So right now, for traditional banks, they really understand that DeFi will be the next monster. So instead of them fighting and then saying no to DeFi, so a lot of banks, what they are doing now is they are actually welcoming and then finding ways for them to incorporate DeFi within their system. Because DeFi, after all, is just a technology. And then the technology, you are able to see plenty of upside. One of the best ways is cost, and secondly is actually the speed. You are able to actually cut down the middleman and to increase the processing speed.
Now, Derrick, as someone who is deeply involved, I imagine, in DeFi with IX Swap, how do you envision DeFi's role in the broader financial landscape? And I mean, piggybacking on Johnson's point, are financial institutions more likely to embrace DeFi as a new tool, or are you expecting some resistance?
Yeah, I mean, I think one of the key ways in which we actually implement or adopt DeFi on IXSwap. And I think this is actually one of the main use cases in the whole Web3 ecosystem is we have a decentralized exchange. I touched on this a little bit on the previous session, but essentially what decentralized exchanges offer, again, to summarize, is a way in which users or traders can come and trade without requiring another person to be on the opposite side of the trade at that particular point of time.
Yep.
So, I contrast this against centralized exchanges, right? If you've ever used a trading brokerage platform or, maybe one of the bigger crypto exchanges like Binance, right? You want to do a spot trade, you want to buy a one Bitcoin or, some Ethereum, you would literally go to that page, you would open it up and you would see all the prices in red and green, right? So centralized exchanges operate on what's known as a matching engine and order book. So all the prices in red and green are all your sell and buy orders, right? So somebody actually is on the opposite side willing to sell or buy from you at that price. Whereas in a decentralized exchange model, all this is done by what I would describe as preloading liquidity pools with these assets.
Okay.
As Johnson described it, this is through liquidity provision. So an analogy I can give for perhaps our listeners out there who are not as familiar with the space is, I like to use this, it's not perfect, but let's say, Zach, you want to buy a drink, you're thirsty, right?
I am.
So you can go to a convenience store or a grocery store to buy a drink. In order for you to be able to buy that drink, that shop needs to be open and the cashier needs to be present at the till so that you can pay. If it's closed, too bad. You're going to go home thirsty, right?
Right.
Whereas the other option for you to get your drink is to go to a vending machine. You can pop in your money. You don't have to interact with anybody. You can, buy at any point of time, right? In the middle of the night, 2, 3 a.m., whatever, right? You can do so. And that is an analogy for decentralized exchanges versus the grocery or convenience store analogy for centralized exchanges. The way I see existing financial institution or traditional financial institutions, whether they're coming board or how their reception is towards DeFi is, I think, yes, previously we've seen some resistance from them, but I think it's got to do with mainly two things, right? A threat to their existing financial infrastructure because you're disrupting their entire system, right? The way they essentially do business. Yep. Secondly, it's also because of regulations or regulatory attitudes from also from governments, right? We've seen in the US, the incumbents are have been very resistant. There was something known as Operation Choke Point 2.0, which is basically what the crypto industry knew as their sort of internal policies in the way they want to regulate and put out a lot of barriers around all the sort of activities that crypto players could do. But we're seeing that change, right? If Donald Trump takes office, he's come out as a very pro-crypto candidate. We're seeing that in Russia also changing now, very recently saying that they're going to accept crypto as a form of payment. In China as well, opening doors through Hong Kong. So I do see that, and personally, I do know also of financial institutions which are poising themselves, right, positioning themselves to take advantage of this space. They are laying the groundwork. Yes, for sure, it's going to take some time, but those that are more progressive, they have already thought about this and they have already laid the foundation bricks to sort of capitalize on this new innovation.
So now Derrick has mentioned about regulation taking place. So Khai, how do you think regulations will shape the relationship between traditional finance and DeFi? And could we see regulations that actually foster innovation, or could there be risk that it will actually stifle DeFi's growth?
Yeah. So I'm going to talk about two things here when it comes to regulations. Number one is adoption. Number two, cybersecurity, right? It's something that Johnson and I constantly talk about. So I think when it comes to regulations, assuming that there is going to be a regulations when it comes to DeFi, I think that will greatly increase adoption. So I'm not too sure, of course, I can't predict how the regulations will be exactly, but rather I would imagine that assuming that DeFi is regulated and is now legalized in Malaysia for certain, normal people like you and I, we can actually contribute to the DeFi liquidity pool, and we can become lenders ourselves. As we all know, in Malaysia, you need the money lending license to be able to lend out money, right? So without that, only financial institutions can actually lend money. So and there's, like it or not, there's so many illegal money lenders out there, and then those. DeFi, a regularized DeFi or legalized DeFi may potentially curb illegal money lending activities. So I think that will be a good thing. Right. Number two, I think regulations, potentially there will then be policies or guidelines in place that say that, okay, if you want to operate a DeFi platform here in Malaysia, you must make sure that your cybersecurity is of a certain standard. We all know there are so many news happening on a weekly or monthly basis of DeFi network or DeFi platforms getting hacked, getting compromised, and resulting in money losses, right? So I think with regulations in place, we can ensure to some level that the minimum cybersecurity standards would be in place for a licensed DeFi platform, for example. And that would definitely, again, drive up adoption.
Now let's move on to the topic of CBDCs, or central bank digital currencies. Could you just give our listeners a quick explanation on CBDCs and why now central banks are exploring this concept?
Let me try to break this down as aptly as possible. So essentially, CBDCs are digital forms of our fiat money. So it's very similar in concept to stablecoin, right? Where the value of the currency itself, the value of the digital currency itself wouldn't fluctuate. It's backed by our fiat. It's backed by our, say, assuming that BNM were to issue a CBDC, that would be backed by Ringgit Malaysia. And it's something that's issued by the central bank, hence controlled by the central bank. The main benefit of CBDC, or at least what our government or our central bank is trying to explore, is when it comes to cross-border transfer. As opposed to using TT, right? Transferring of CBDCs would actually take place at a faster rate. So you expense with, or rather you dispense with, a lot of the usual administrative hurdles, processing time, time zone difference, right? So it allows cross-border transfers to happen at such a great speed. So I think that's mainly, number one, that's what CBDC is all about, the way I see it. And number two, why our government is trying to explore it.
So Johnson, building on that, how do you think CBDCs will interact with existing cryptocurrencies, your blue chips like Bitcoin, Ethereum? Are they more likely to be complementary assets, or are they in competition with your Bitcoin and Ethereums and the like?
Thanks for the question. There's a very good one, like as mentioned by Khai Yi just now. So I would say that it's like or not, it's just a form of stablecoin. And then I would say that actually different tokens, they have different use case. And then when it first being created or when it first being minted, it's usually for a specific purpose. So for stablecoin, I would say that the key function of stablecoin is actually for payment purposes. So you want to facilitate a payment. I want to use it to buy, to purchase anything. I want to use it to pay salary and whatnot. So, but the thing is, as I mentioned, every single token is likely to be created with a strong narrative. Like for Bitcoin, depending which school of thoughts that you are, some people will be seeing Bitcoin as a digital gold, something that you are able to actually store the value. And then there'll be certain tokens like Ethereum, like anything else. So basically, certain thing is actually used for gas purposes. Certain thing is actually for exchange purposes. So I would say that a stablecoin as a whole, or either Bitcoin, Ethereum, these tokens, they all have a place within the ecosystem. They are here not to compete. They are really here to complement one another to make the entire ecosystem more robust. Because every token has a use case. And then, for example, are we able to use Bitcoin for payment purposes? Answer is yes. But is it going to be that efficient compared to a stable coin? The answer may be no, because stable coin is supposed to be stable. Unfortunately, not all stablecoin is actually stable. There's a downside of it. But for anything else, for example, for Bitcoin, the thing is, the price of Bitcoin yesterday and the price of Bitcoin today will be different. Yep. So it's going to be very, very difficult for anyone to use Bitcoin for payment purposes if you are going to face the harsh truth. Whereas for stablecoin, in theory, it's supposed to be stable. Then with that, it will be a lot easier and a lot more effective in order for them to be used for payment purposes.
Thanks, Johnson. So I can't bring my gold bar to the mama to pay for my
Not yet.
Mee goreng. Okay.
Not yet.
Disappointing. Derrick, so now what's your take on, I'm curious on your take on stablecoins in the context of CBDCs. Do you see stablecoins playing a role in bridging traditional finance and digital assets?
I think stablecoins and CBDCs have different roles to play. CBDCs, as we know, are basically digital representations of fiat monies, right? So I think their practical use is probably more limited towards integration with existing financial infrastructures.
Yep.
Whereas stablecoins has a big role, and we are already seeing this. They play a big role in the DeFi ecosystem. For all intents and purposes, I think we're just gonna discuss asset-backed stablecoins here. Yeah. So I think now we know that fiat monies are never going away, right? You and I, we will always need Malaysian ringgit or US dollars to pay for things in our everyday life. What stablecoins offer is basically a stable medium of exchange between fiat monies and digital assets.
Okay.
Right. So if I wanted to, most exchanges, if you want to buy a digital asset like a Bitcoin or Ethereum, what I would first do is on-ramp or convert my fiat monies into a stable coin. Yeah, there's some exchanges now in Malaysia that allow you to do it directly with ringgit, but typically for a super majority of the Web3 ecosystem, it's through stable coins, because they typically, a lot of the trading exchanges, they pair digital assets or crypto against stable coins. And why I as an investor or user might want to use stable coins, other reasons could be because they provide a safe haven for times of market volatility. As we all know, crypto assets, they fluctuate very wildly, right? It's not uncommon to see 40-50% swings in a single day. So in times like this, those who have digital assets might want to sit it out, right? So they might want to, what can they do? They can just simply very quickly and very seamlessly convert their Ethereum or Bitcoin into stable coins at that point of time. Why they might not want to cash out into fiat currency at that point of time is a number of reasons, because they just want to sit it out for a while. They want to deploy at a moment's notice, right? Or even if you're talking about yields, stable coins actually give you a lot higher yields than what you see in traditional the traditional market, right?
20% anchor protocol.
Yeah, even if you're talking about just last year, even very simple Binance or Bybit exchanges, right? Their earn products were giving you 20-30% per annum, and this is immediate redemption. Other than that, there are other DeFi protocols like Sega that actually have come up with very interesting structured products. They're basically taking a page from the books of banks or traditional fund managers. They're offering shark fin products, DCI kind of structured products as well. So you can also take advantage of that as a stablecoin user. And all in all, I think if you're talking about the crypto ecosystem, I think they will, honestly speaking, I don't see them ever accepting CBDCs in the Web3 ecosystem itself. Simply because CBDCs is centralized, privacy concerns, which are all the antithesis to the ethos of blockchain and decentralization. But I do think that both have a role to play in the ecosystem, different roles. But yeah, I do see that I see the argument for which both can exist side by side.
Now, Khai, bringing it back to local shores, how is our central bank approaching the development of CBDCs and what impact could this have on the local market?
Yeah. So I think just now I did mention a little bit about Malaysian or our PNM's focus when it comes to the deployment or development of CBDC, right? And I think first of all, we need to, take acknowledgement of this fact that in Malaysia, we use electronic payment a lot. Electronic transactions, I think in our country is probably second to China, if I'm not mistaken. I looked up the statistic. I think last year alone, there were 11 odd billion transactions, or electronic transactions that took place over the whole of the year, right? So on that note alone, that is the reason why BNM really wants to push for CBDC. And a few years ago, there was actually this project that called Project Dunbar that BNM took part in together with MAS and also I believe Central Bank in South Africa and also Australia to probably have a pilot case to come up with demos of each of these participant countries having their own CBDCs and then test it out. How effective would it be for money to be transferred cross-border among these few jurisdictions? So I think that project, the first two phases have already finalized. There were already a demo, but as of yet, I do not know what's the outcome, whether Malaysia is really going ahead with issuing their own CBDC. So that's still something that we are waiting for.
Now, moving on from CBDCs, we're exploring another exciting area of digital assets, which is the NFTs, non-fungible tokens. We explored that a little bit in the previous episode, Derrick. Maybe you can just give just a brief definition of NFTs and why is it now getting more attention beyond just digital art?
NFTs or non-fungible tokens, right? I suppose self-explanatory in its name. But to put it in a sentence, I would say they are unique digital assets that are stored on the blockchain, and they represent proof of ownership over specific items, which are not interchangeable due to their distinct properties. We saw, yes, all the hype around digital JPEG files or all these abstract art pieces, right, going off for crazy prices, especially during the NFT boom of 2021, going up to $100 million. But since then, we've also been seeing more and more use cases, right? What came after that was things like collectibles or memorabilia. So digitized forms of player cards. There was this collection called the NBA Top Shot collection, right? Basically, they are snapshots of moments in time, or you can say short reels, right, of specific famous highlights or moments in games. Then we also saw, or we've also been seeing it in the fashion industry. So there was this company called Artifact, right? They are basically clothing retailers. So they were selling shoes, specifically I think these specific Nikes. They basically created NFTs of them, which are basically digital images of the shoes itself. Anybody who wants to buy it can use your wallet. You buy it, you get the NFT into your wallet. You then have the right to claim ownership over the same physical pair of shoes. Or you can just let Artifact keep it for you. If it appreciates in value, you can just sell the NFT on to somebody else. That person then gets ownership of it, and you never have to actually deal with the shoes itself. So that's I thought was another interesting use case.
Now, Johnson, which other sectors do you think have potential for NFT integration, and what new use cases are you most excited about now?
Well, I think that right now US election is coming up, and then we all know that Donald Trump is actually he's launching his own NFT to raise funds. So jokes aside, which is the real case. I think the NFT has a great potential, especially any company they would want to incorporate into their loyalty program. So just piggyback like what mentioned by Derrick earlier. So we actually know some clients and also some company, they are actually launching the NFT to couple together with a loyalty program. How they are doing it is actually, so they'll be selling NFT, and then just by holding the NFT every year, they get to redeem a new pair of stickers. So on top of that, in order for them to encourage and also to reward the customer that is holding the NFT, so for example, they will have access to exclusive launch. So before any stickers or any products that are being launched in the market, 1 week before, just by holding that NFT, you yourself will get to have access to purchase any particular stickers before anyone else. So this will actually work as a very, very strong incentive and loyalty program just by holding the NFT. So a lot of companies, they are actually trying to explore how NFT and the very traditional loyalty or redemption program to work hand in hand.
Now, Khai, given the legal complexities, how do you see NFTs actually intersect with intellectual property rights? What unique challenges and opportunities do they present for creators or businesses?
So I think I'm just going to confine my response to JPEG NFTs, right? Because I think when we talk about intellectual properties, those would be the most relevant type of NFTs when it comes to IP. So I think one of the challenges that a lot of the NFT purchasers used to face or NFT holders used to face is that there was a confusion of what rights do they actually derive from owning that particular piece of NFT. A lot of the people actually thought that they owned the underlying image itself, right? Assuming that the image is something that's very, very valuable, and they actually have the rights to commercialize, maybe print the image out on a t-shirt or on a mug and then sell it as merchandise. But a lot of all these things are not actually true, or rather what people tend to believe. At the end of the day, you still need to go back to the T&Cs of your purchases, right? Assuming that you buy it from OpenSea, a platform that I used to visit a lot. When you make purchases, I think you need to really find out what are you getting from the NFTs itself. You may not actually have ownerships over the image, but you actually get a license to be able to commercialize it, right? In some instances. In some instances even, right, you actually don't get anything apart from being able to have the right to display that particular image, maybe just on your wallet.
The bragging rights.
Yeah, correct. It's just a bragging right for you to use it on your profile picture or whatever. You can't actually commercialize it. So then what good do you actually have, right? Apart from a few good effects.
You get a brag.
Good effect. Exactly. So of course, but given a very well structured, or rather a set of NFT that actually allows its holder to commercialize it, right? I think that creates incentives for people to come up with new revenue stream, right? Assuming that the NFTs, the images are actually very, very beautiful, very, very pretty, very attractive, then they can actually be printed again on t-shirts, or maybe turn into merchandises, or even turn into series, right? Or cartoons. So those are the possibilities, I think, that business owners can potentially explore, especially for businesses that have a mascot that you can potentially turn into an NFT.
Yeah, Khai, actually, it's usually the most ugly ones that go.
Correct. It's never about.
You're right. It's not about how pretty it is.
Correct.
My apology.
I'm coming for you, Upin and Ipin. I think it'll be very valuable. Yeah. Now, Derrick, back to you. How do you see NFTs evolving beyond the current applications? Are there particular industries where you believe they could have the most transformative impact?
Yeah, I think we're seeing more and more nowadays, more real world commercial use cases, right? Very close to home, I know of this project where they're actually creating NFTs over a durian farm. So we all know Malaysians love durians, right? I mean, even lots of Asians love durians.
Yeah. Or hate.
Yeah, it's either love or hate.
Those are not Malaysians.
Relationship. But lots of these farms are exporting, right? And to raise money actually to maintain these farms, they're actually selling NFTs where one NFT represents ownership over one specific tree. And we know this is unique because each durian has a different grade, and even within that plant itself, it can bear different quality of fruit. Another interesting use case I see now is fractionalization of NFTs, which give basically people the opportunity to own a part or share of the NFT itself. And not all of us are as rich as Khai Yi and can afford a lot of these. Exactly. So we actually did this with Board 8 Yacht Club.
Okay.
Where basically each token holder gets the right to the revenue generated from that NFT itself. Other things I see this happening, other places I see this happening in I think it's healthcare. I mean, it's not happening in Malaysia, but I think it's a very, very good idea where, because from what I understand, a lot of the medical records now in hospitals, especially public hospitals, are kept through manual processes. They're just papers, right? So the idea that you can digitize these medical records, put it on the blockchain so that they're secure, tamper-proof, they're always accurate. You can then transfer them securely to other hospitals or even insurance companies to verify insurance claims, right?
Good.
So I think these are some of the interesting and very, I think, useful ways in which NFTs are being used nowadays.
Thanks, Derrick. Now, moving on, let's talk about a critical aspect that cuts across all these technologies. And it's, of course, cybersecurity. Now, I want to hear from Derrick, right, from your perspective in terms of compliance. How is your company, IX Swap, addressing these cybersecurity concerns? And do you have any best practices that you put in place to protect your users' assets?
Yeah, being in this space and being a remote first company, you cannot imagine how often we are subject to these kinds of threats, right? And attempts. Just the other day, an impersonator was impersonating my CEO, messaged me on Telegram asking me to transfer some funds over for the company. So I responded and said, I can, but you need to give me 100 ETH in gas fees first before I do so. But I tell you, I mean, that's why we have our own in-house cybersecurity team who's always on this. They always conduct lots of smart contract security audits, penetration testing to identify all these vulnerabilities. We also have lots of policies and procedures in place to deal with any incidents if they do happen. Apart from that, obviously they conduct periodic training for staff so that we're always aware of the latest risks. I would say just the entire team is very turned on and tuned in to these risks.
Thanks, Derrick. And now, given the pace of innovation in digital assets, what potential risks should investor be aware of as they navigate this landscape, and how can they prepare for these challenges?
Yeah, I think the three main recurring ones are always volatility in the prices of assets. Number two would be security breaches, hacks, and thefts. The third would be where we see scams and frauds, right? Bad actors coming to the space trying to rug pull or scam you. The way I think people or users or investors can prepare or to guard against these kinds of threats is, number one, education is very important. We all need to educate ourselves so that we are always aware, constantly vigilant against what's happening. Doing your own research, DYOR, is something that's said. Yeah, I mean, we say it over and over again because everybody should always be responsible for understanding what they are buying, understanding what they're investing in. There are always red flags around, like if people promise you risk-free returns or exorbitant returns, or their team is just there's no transparency in terms of who their team members are, right? Those are very, very big warning signs. For returns, yes, it's not uncommon to see high returns in this industry, but what we should always question is trying to understand how these returns are actually generated and seeing whether there is at least some form of valid basis for doing so. The other things I would say is just having healthy password protection practices, right? 2FA, changing a password
MFA.
Constantly. Yeah.
Password 1, 2, 3.
Things like that.
Admin 2, 3.
What I would recommend for new users is maybe use larger exchanges which are more reputable licensed, right? And if you become more sophisticated later on, use self-custody solutions, right? Then just generally very obvious things like never put all your eggs in one basket. Don't invest more than you can lose. Spread your risk out, adopt some risk mitigation strategies. That's pretty much it.
Thanks, Derrick. That has been very sage advice. You've been listening to the Legal Insight podcast by HHQ, and for the past 2 episodes, we've had a very special guest, Derrick Leong, Head of Legal and Compliance from IX Swap. Thank you so much for joining us, Derrick.
Thank you very much, guys. It's been a blast.
Yep. So if you've enjoyed the last 2 episodes, do remember to subscribe, to like, and to share this podcast to people who may find this episode useful. You may drop your comments for any questions that you have. I'm sure Derrick will be on the comments answering some questions as well.